if you thought 2022 was bad from an inflation standpoint, you ain't seen nothing yet. It's going to be much, much worse and much, much more chaotic and much more destructive for regular people. So that's the decade we have in front of us. When we went off the last vestiges of the gold standard in 1971, we basically handed all the world's governments, especially the US, but everybody else too, unlimited credit cards. In effect, they could basically, via a monetary printing press, create as much new currency as they wanted to and use it for whatever they wanted. So naturally, the governments of the world got bigger and bigger and bigger because there was no restraint on their growth. And, now we've got insane amounts of debts pretty much everywhere in every sector of every major society, which is the inevitable result of allowing governments to create as much new currency and encourage the creation of as much new debt as they want. And so we're where you would expect us to be, given what rational people know about human nature. And it's a really bad place because we've been taking on so much new debt that basically what we found out in the last couple of years is that this is all the higher interest rates can go. Because when you've got huge amounts of debt, rising interest rates increase your interest expense. And so if you look at a chart of government, for instance, the US government's interest costs totally spiked from like $200 billion a year to over $1 trillion now. And they've got another stat called personal interest cost, which is the costs that you and I and other individuals have to carry, what we have to pay on our debts. And that also spiked. It went from a few $100 billion a year up to 600 and some just lately. So those are debilitating numbers. In other words, you can't have your interest costs soaring like that without going broke. And so we basically figured that out. And that's why the Fed has stopped raising interest rates and is going to start cutting them pretty soon. Not because inflation is below their target rate, which it's not yet, but because higher interest rates are going to bankrupt everybody. All the major governments, most individuals now who have credit card debt or adjustable rate mortgages or adjustable rate business loans, anything like that, their interest costs are soaring, and it's going to become debilitatingly expensive unless they get interest rates back down. And this is a huge deal because it means we can never again raise interest rates. And when the markets figure that out, people are going to act accordingly, and they're going to panic buy anything that can't be inflated away. The central banks of the world, basically, whenever they feel like things aren't growing fast enough, they create a lot of new currency and they hand it to the big banks. The big banks then give that money to their preferred customers, with which they then go out and buy real estate and stocks and bonds and make those things go up in value. So the rich get even richer, and the rest of us suffer with higher cost of living. But there's this group of people called Keynesian economists who would tell you that this is right and natural and how it should be, and that we should always have a background rate of inflation because that kind of greases the skids of the capitalist economy. They're clueless. They're fundamentally and totally wrong for a variety of reasons. But the biggest one is that once you start a little bit of inflation, that leads people to borrow more money, because if you see your currency being devalued, the logical thing to do is go borrow money and then pay that debt back in devalued currency. So a little inflation leads to a lot of new debt, which leads to the need for even more inflation, and so on until you spin out of control. And that is true always and everywhere. And that's where we are right now. We're in the mid to late stage of that process. So no, we don't need inflation. In fact, we in a healthy economy, the thing you mentioned about TVs getting cheaper and computers getting cheaper, that should be the dominant factor in the economy, and we should have deflation. In other words, as we get better at making things and smarter at doing it more efficiently, the price of stuff should go down. And in the 200 years, we had something called the classical gold standard, which basically ended in 1914 or 1971, depending on how you date it. The general price trend was down. In other words, we had kind of steady deflation for centuries, not decades, but centuries, because we were a healthy economy that was getting more and more productive with a constrained money supply, and that meant the prices of things went down. The cost of living went down for people. And it was a really healthy time financially and economically. We're the opposite of that now. And we're going to pay a horrendous price for screwing up like this. The experiment with non-gold-backed currency is only 50 years old. For all of the first 10,000 years of human history, money was a real thing. Usually it was gold, sometimes it was silver, sometimes it was other things, but mostly gold and silver. And that constrained the ability of governments to just go out and spend, invade their neighbors with borrowed money, stuff like that. You couldn't do that up until 1971, basically. And so we're trying this experiment right now with a form of money called fiat currency, which exists by government fiat or government decree, and is worth whatever they tell us it's worth. And that is failing on a monumental scale right now. So we're heading into the really chaotic part of the process when everything breaks down, and then we have to start looking at some kind of a monetary reset where we go back and figure out how we want the monetary system to work now that it's broken, and decide whether to go back to the old style of commodity-based currencies or do something new. So it's going to be a very fun debate, but it's going to be preceded by a horrendous stretch when, if you thought 2022 was bad from an inflation standpoint, you ain't seen nothing yet. It's going to be much, much worse and much, much more chaotic and much more destructive for regular people. So that's the decade we have in front of us. Remember austerity from a few years ago? That was a government policy to get their finances in order by cutting spending. Well, that didn't work politically. They all got voted out of office. Most people suffer from that. So if you try to broaden it out and you hurt the middle class and the working classes, there's a majority voting bloc that's going to kick you out. If you try to put the pressure on rich people, say have a wealth confiscation tax or something like that, like Bernie Sanders would do if he could, well, the rich just make sure you have an accident. And I'm not really... That's not hyperbole. They will literally kill you if you're a politician and you try to confiscate, 30% of billionaires' net worths or something like that. So the numbers can never be made to work, either mathematically or politically, once you've borrowed a certain amount of money. And that's where we are now. So we tried austerity, we tried cutting spending, that flat out didn't work. So the other alternative is to try to really juice growth. You borrow a bunch of money and you spend it, and you hope that generates enough tax revenue to more than pay for the interest on that debt. And that doesn't work either. We've tried that a bunch of times, or we've tried that actually continuously since the 1980s. And it doesn't work either. You cannot generate tax revenues at a level that pays off large amounts of new debt. You basically just end up with new debt, higher interest expense, and that zeroes out the benefit that you would have gotten from revenues and so on. So there's really no way out of something like this. Basically what happens, in human history, countries have tried this a bunch of times, where they screw up their own currency. They borrow too much, they debase their currency, they have a currency crisis, they collapse, and then they start over with sound money. But what's different today is that the whole world is doing it. It used to be like one country would do it in the context of a sound money world. Everybody else was on the gold standard. And this one country tried a new experiment with fiat currency, and it blew up on them. And they either got invaded because they were so weak, or they had to hunker down for a long time to kind of rebuild the semblance of a working state. But this time, every major government is doing the same thing. So there is no broader sound money world in which this is going to happen. It's going to happen all at once or on a rolling basis across the world. And, that makes it new. So it's hard to predict. You can predict, that everything will happen to everyone as it did to individual countries in the past, but that's not guaranteed. Could be much worse because it's happening everywhere and there's nobody to rely on to bail out anybody else.